Which companies have grown by 500% over the last 2 years? In which markets is this even possible? And most importantly, has the window of opportunity already closed, or are we just at the very beginning of this trend? In today's video, we'll take a detailed look at how the memory market actually works. And if you're already investing in AI companies or just planning to invest in infrastructure, then be sure to watch this video to the very end. We made it specifically for you. And of course, we'll examine in detail how long this cycle will last and how to get the maximum profit from the current memory shortage. And if you're interested in such breakdowns and you want to do more than just read the news but want to understand deeply what's happening in the markets, subscribe to our YouTube channel. There we analyze the main events and trends and how they affect our portfolios. So subscribe, give us a like, and be sure to hit the bell icon so you don't miss our future videos. And DIMA, returning to the memory market, we can all see that it's experiencing very rapid growth. Some companies have grown by 100%, some by 300, some by 500. I mean, it's all over the place. And probably the key question is, how much is all this backed by real figures and fundamentals?
Yes, you're absolutely right. If you look at the companies that are in one way or another connected to the memory industry, the growth of their stock prices is simply staggering. For example, the key memory manufacturers, namely Samsung, SK Hynix, and Micron, their stock prices have grown over about 2 years by 300, 450, and 500% respectively. Well, the numbers speak for themselves. But most importantly, it's worth noting that this growth doesn't look like a bubble, because it's fully backed by the rising cost of the underlying asset, or memory itself.
And Dima, just to be clear, does this only apply to the high-tech segment, or does it also perhaps affect the mass market memory sector as well?
Well, what's most interesting is that all memory has grown. And in fact, mass market memory in some segments has grown even more. Why is this happening? Because looking ahead, if we talk about memory supply, it's much more profitable for manufacturing companies to increase production of the highest margin memory, or HBM. Consequently, the shortage of basic memory remains at its current level, and this will likely continue for quite a while, simply because there's little of it, and companies aren't rushing to increase its production. If we look at specific figures, the price of basic NAND memory has increased about 9-fold in a few months, from below $3 to just over $20. If we talk about DRAM memory, then in about 6 months, its cost has risen from $10 to $35. But for the most in-demand high-tech HBM memory, the cost has risen from $10 to $25. And of course, all this growth in memory prices hits the pockets and budgets of AI giants very hard, who buy it to equip their data centers.
Well, Dima, a perfectly logical question arises. Why don't the factories and manufacturers just increase their capacity and satisfy this excess demand?
Look at how the memory market used to function and how companies involved in producing that memory were valued. Traditionally, it has always been a very cyclical industry, and memory was perceived as, well, as a commodity like copper, oil, and the like. Because the main consumers of memory chips were smartphones, personal computers, and standard servers. Accordingly, when the economy was doing well, consumers had money and companies likewise had budgets to expand their own businesses. During this period, demand for memory grew and consequently, the cost of memory also rose. After that, traditionally, a cyclical downturn in the economy would begin. Before this, memory-producing companies would ramp up production volumes, but when the economy started to feel not so good, memory prices would start to fall and market overstocking would occur. And for some period of time, these companies didn't feel very great. Now the situation has fundamentally changed, and that very cyclical nature of the industry has changed due to what? Due to the fact that data centers have emerged with a colossal volume of demand for memory. And this demand, it's not cyclical, it's more long-term, and its scale is, well, truly impressive, because we all know what volume of capital expenditures CapEx tech giants generate to equip data centers, and that's hundreds of billions of dollars. Therefore, we can say that the industry has changed somewhat. At the same time, it's worth noting that companies in previous cycles got burned very badly by this tendency to uncontrollably increase production volume, only to end up in a situation where so much memory simply isn't needed and suffer losses for several quarters in a row. So this time they're actually not in a hurry to strategically increase production volume, but on the other hand, it must be noted that it's not that easy to increase it. Because in order for you to build a new factory for memory chip production, you need to go, for example, to ASML and order the equipment to produce these chips. But ASML likewise has orders booked for years ahead. And by the way, we've filmed a separate video on this topic where we analyze the entire semiconductor industry in detail, from how a data center orders a server rack to, well, the moment of production itself. It's actually a very interesting and detailed video that breaks down the entire supply chain. So follow the link in the description of this video and, well, check it out if you're interested.
Okay, Dima. So it turns out that the market could stay in this state of deficit for quite a long time. And given this cautious approach by companies in terms of increasing demand and the massive demand from AI giants, what could this all lead to?
Yes, that's absolutely right. The volume of demand is just massive. For instance, to equip a single server rack, which data centers consist of, and there are hundreds of these racks in data centers, one server rack needs about 1 petabyte of SSD memory. And what is 1 petabyte? 1 petabyte is more than 1 million gigabytes. So we're seeing a massive volume of demand. At the same time, as we've discussed, supply definitely isn't keeping up. Therefore, according to analysts, by the end of 2026, the physical deficit for various types of memory will be about 5%. That is, the maximum deficit will be for the most high-tech HBM memory at just over 5%, and for more standard memory, just under 5%, but over 4%. And for anyone who's ever traded or deals with commodities, understanding that your supply actually lags behind demand by about 5% means that, well, the prospects for price growth are just truly massive. Basically, when supply falls short of demand, prices are almost certain to rise.
And when, Dima, will we see this actual price peak?
Well, nobody has a crystal ball, at least we certainly don't. But we need something to go on, so let's look at the opinion of Goldman Sachs. Goldman expects the peak in memory prices to occur at the end of 2026, while the physical deficit will persist until the end of 2027. And for example, from roughly current levels, DRAM memory prices will rise by about 170 to 180%, and NAND by 120 to 130%. But in any case, the numbers speak for themselves. It's also important to note that analysts believe prices won't return to previous low levels because the cyclical nature of the industry has changed. Demand is now more stable and more long-term.
Well, right here, Dima, I'd like to mention an important detail. Just recently, a new tool from Google called TurboQuant was released, and this thing compresses data by 6, 7, or 8 times. And so, a logical question instantly arises in this situation. Won't this set of tools solve the memory deficit problem?
Yes, and the market was probably worried about this for about a week because if we look at the market reaction, the first thing we saw was a drop in the stock prices of companies that produce memory chips, but it was all bought back very quickly. Why? First of all, if we're talking about TurboQuant, it concerns DRAM random access memory. It doesn't apply to high-tech HBM memory, which is used in equipping data centers. That's the first thing. Second, yes, the news came out about a month ago, but in fact, we've been seeing breakthroughs in this technology for a year now, right? But at the same time, if you look at the quotes, again, it didn't really affect the stock price dynamics much. And thirdly, it's worth noting that the tech sector has faced this kind of thing many times before. When a new technology emerges that initially, for example, leads to a drop in the cost of a certain asset, it leads to many more new users appearing who generate more requests. The requests become more complex, and ultimately, demand grows exponentially. We saw the same thing with the DeepSeek story when a new language model appeared that initially seemed to consume much less computing power. And we saw a drop in the stock prices of infrastructure companies that are involved in chip production. But ultimately, this led to many more businesses starting to use artificial intelligence and adapting it for their tasks. And in the end, demand for those very language models grew many times over, and following that, demand for infrastructure and chips grew too. We expect exactly the same reaction here. And the market is actually quite efficient. That's why we see that the quotes adjusted to this news for like a week or so, then went up and hit new highs. On our Facebook and LinkedIn pages, we regularly publish detailed analytical reviews as well as current investment ideas. This is a more dynamic format of analysis that can't be packaged into our weekly YouTube videos. So if you're interested in this format, follow the link in the video description and subscribe.
And, Dima, the most important and key question, right, of our dialogue today, let's say, interview. How can you make money on this whole story? That is, when you are considering your investment options, you might be wondering which specific segments you should invest in, or perhaps which particular companies in order to actually beat the market and earn significant multiples.
We have two key favorites in the memory market. First, we really like the South Korean market. We invest in it through the EWY ETF. 40% of this ETF consists of two companies, Samsung and SK Hynix, which are exactly the beneficiaries of what's happening. But besides everything else, the South Korean market itself looks attractive because first, we see active government support there. Second, these are the reforms that the South Korean government is implementing to encourage companies to do buybacks and pay dividends in order to increase their shareholder value. We saw roughly the same thing, like about 3 years ago in Japan, when the Tokyo Stock Exchange carried out a similar reform and started encouraging companies to do this. More or less the same thing. After that, the Japanese market grew significantly. So Korea is somewhere in the early stages of that same process. That's why we really like the South Korean market. And plus it benefits from technological growth, from what we're seeing in the artificial intelligence sector. Now, in the United States market, we're looking at like the leader in the memory field, which is Micron.
Well, and a question for you, dear viewers. What are you betting on? On, well, the tech giants from South Korea, or on, well, the well-known company Micron? It'll be very interesting to read your comments on why you're making that specific choice and what, well, is the basis for, well, your decision making. And so, Dima, let's wrap things up. What key risks do you see in, well, the memory market?
Well, actually, we talk about risks regularly, and like they, you could list them straight from a textbook. But I think when we touch on the story of artificial intelligence, and specifically, well, the memory segment, one of the important risks to consider here is that some investors still view this story, with a perspective from the past, seeing the industry as cyclical. And what does that lead to? A cyclical industry implies fairly low multiples. Because if we look at all commodities or all companies involved in commodity extraction, their multiples are traditionally lower than those of other types of businesses. Because, well, it's kind of hard to give a 30 multiple to companies that are involved in oil extraction. Like for 2 years, oil prices go up, then for 2 years they go down. Consequently, the company has very volatile financial performance. And roughly what we're seeing now is a transformation from a cyclical industry into a more stable one, with long-term, like extremely interesting prospects. So we see investors saying that the company's stocks have risen too much. And they've been saying that for like more than a year now. But we believe that in fact the world in this sector has changed. Therefore, we need to start evaluating companies differently. And based on that, if we really see the majority of institutional and large investors start looking at the memory market as a non-cyclical sector, we'll see additional, potentially multiple-fold growth in quotes, because the multiples used to value companies before will no longer be relevant. So in our opinion, you need to be flexible and first consider increasing the share of stocks of companies involved in memory in your portfolio. And second, don't rush to lock in profits.
And to build a proper balanced strategy in the securities market, be sure to sign up for a consultation with our leading analysts. Follow the link in the description of this video.